To report the sale of inherited property on your tax return, you need to follow a step-by-step process. First, determine your basis in the property, which is typically the fair market value of the property on the date of the deceased person's passing. You can find this information on the estate's tax return or by consulting with the executor of the estate. Next, calculate your gain or loss on the sale by subtracting your basis from the sale price. If you sold the property for more than your basis, you have a gain, and if you sold it for less, you have a loss. You will report this gain or loss on your tax return using Form 8949 and Schedule D. On Form 8949, you will list the description of the property, the date you inherited it, the date you sold it, your basis, and the sale price. You will also indicate whether the gain or loss is long-term or short-term, depending on how long you held the property. Inherited property is considered long-term, regardless of how long you held it, as long as the deceased person held it for more than 1 year. You will then transfer the information from Form 8949 to Schedule D, where you will calculate your total long-term gains and losses. If you have a gain, you may be subject to capital gains tax, which can range from 0 to 20%, depending on your income tax bracket. You may also be subject to the net investment income tax, which is 3.8% of your net investment income. To minimize your tax liability, consider the following best practices. Keep accurate records of your basis and sale price, as well as any expenses related to the sale, such as real estate commissions and closing costs. You may be able to deduct these expenses on your tax return, which can help reduce your gain. Additionally, consider consulting with a tax professional or financial advisor to ensure you are taking advantage of all the tax savings available to you. They can help you navigate the tax laws and regulations and ensure you are in compliance with all tax requirements. In conclusion, reporting the sale of inherited property on your tax return requires careful attention to detail and a thorough understanding of the tax laws and regulations. By following these steps and best practices, you can ensure you are reporting your gain or loss accurately and minimizing your tax liability.